Okay. Let's get started. Virtual homebuyer seminar. Hopefully, this is easier for everyone, not having to come in person. I am Austyn Anderson, and I am with Summit Lending. We have Rose on the call, and she is the broker and owner of Tala Realty Co. So she's got 7 to 8 years plus of experience, and we do a ton of deals together. So Rose and I like to work together because we know and trust each other. We've done a lot of deals together. So it's just easier whenever you work with other people in the area. And, we have a great team. We have a great title person, great insurance, great credit people. And that way you can ensure that, we're referring you to people that we've actually done business before, and you're not just getting kind of stuck with randoms out there. So about me, I am from Kansas City. I've lived here my whole life. I have a master's degree from the University of Kansas City, Missouri, UMKC, and I got my master's degree in economics in 2018. So I have been with Summit Lending for a little over 2 years, and we specialize in FHA, conventional, VA, and USDA loans. There are a ton of loan programs out there. Just keep in mind that 97% of loans fall into the FHA, VA, USDA conventional category. So, I have other programs out there if you're interested in those, but I kind of dominate this area. So I try to stick with what I know best. My favorite thing about being in mortgages is just that I make the process easy for my clients. Rose and I get deals done super quick. That way you guys can focus on the exciting things like moving and decorating and, all that kind of stuff. And you don't have to focus on finding your W-2s before you're moving. So I would say there's three big areas that you need to focus on whenever you're thinking about where to start. I have a lot of people reach out to me and they're like, I have no idea where to start. So the big three things are going to be your credit. You need to have a credit score over 580. You need to have 2 years of work history. And then typically you do need some sort of asset. So these are kind of the big things that I'm going to jump into to hopefully answer your questions. We'll also link you guys this PowerPoint presentation that we both do. That way you guys can refer back to this later. After the seminar, we're also going to send you a copy of our pre-approval homebuyers guide. So that's something that Rose and I have collaborated on. It's basically the most common questions that we get put into a really short, easy to read ebook that somebody with no real estate background could understand. So we'll send you guys a PDF copy of that too that you can look at right on your phones. So here's a timeline of what the pre-approval process looks like. So I do like to have an initial conversation with people. Typically, it's pretty short. We just kind of go over what you're looking for. That way I can get a good idea of what your situation is. And typically the reason why I do that is because if you're not qualified right off the bat, I'm just going to tell you. I do not like to pull anyone's credit unless I know that you're qualified, because it doesn't make sense to me to have a hard inquiry on your credit if I know that you're not going to qualify right now. So in the initial conversation, I'll be able to give you some guidance like, hey, yeah, let's move forward, or let's get a game plan together, or hey, you need to do these steps. After the initial conversation, as long as it makes sense, I'll have you start the application, which is super easy, and you'll upload your last 2 years of W-2s and 30 days of pay stubs. And then at that point, I will look at your pay stubs, make sure all the numbers make sense. And then, as long as you're good with it and you're ready to move forward, we pull credit. After we pull credit, I will review your application and then, issue you a pre-approval as long as you qualify. Just as a heads up to everyone, the biggest thing that I see people struggle with and what delays the pre-approval process is getting their documentation together. There are a lot of lenders out there that will pre-approve you without your W-2s or pay stubs, and I absolutely do not do that for your benefit. The last thing that we want you guys doing is out shopping with Rose or any of our agents, putting down earnest money, paying for an appraisal, and then something silly comes back like you work less than you said you did, or maybe you took time off or something like that, and then you've wasted money out of pocket. So that's just a short version. We'll kind of get more into that. I added this heads up slide because a lot of times when I jump on the phone with people, I have questions for them and they have no idea any of the answers. So these are kind of things to think about before we get together. Figure out where your credit score is at. I'm going to tell you how to do that. You need to have exact dates of the places that you have recently worked. That's something that I see a lot of younger people struggle with. So if you don't know the dates that you were employed somewhere, look it up. You do need exact dates. They're going to verify your employment with your previous employers for the last 2 years. So we do need that information to be as accurate as possible. How much money you're going to have. That's something that typically, people struggle with. Obviously, you don't have to have it right now, but just kind of a ballpark of where you hope to be. Something else on here is a monthly budget for a mortgage. So that's really important because what you qualify for and what you're comfortable paying a month may not be the same. And so I always want to know where you're at. That way, Rose and I can make sure that we keep you in budget and you don't end up in a property that you feel like you really couldn't afford. The other thing that I'll ask about is where you want to live. Now, I don't need like a property address or anything like that, but for first-time homebuyers who don't know this, your mortgage consists of principal and interest, taxes, and homeowners insurance. So Rose and I are going to ask about the area. That way we can give you an idea of what your payment is going to be. And depending on the area, your property taxes are going to impact your monthly payment. So definitely try to think about, if you maybe had 3 top cities to pick from where you would want to live. That way, when we're giving you an estimated payment, you're in the ballpark. Obviously, if you are living in Raytown and you want to move to Johnson County or the Staley area or somewhere with a lot higher property taxes, that's going to make your monthly payment go up. So the first thing to jump into, credit score, you do need a minimum of a 580 credit score. If you're not there, let me know. I'm not a credit expert, but we can definitely get a game plan together. I look at credit reports every day. So, Rose and I are both able to give you some general guidance on what you can do to make your score better. We also have multiple credit repair companies that we work with that are absolutely phenomenal. So if you need connected with somebody, let us know because we have people that we know and trust. They're not, scammy. They're not just going to take your money and never follow up with you, which does unfortunately happen in the credit world and can discourage people. So the best way, in my opinion, to check your credit is the free Experian app. It works like Credit Karma, so it's free. It's a soft pull on your credit. And Experian is one of the 3 bureaus that we actually pull from. So in my experience, the credit score that it gives you is a lot more accurate than the number on Credit Karma. So if you're over 580 on the Experian app, that's kind of how we decide if you're going to move forward. You can also get a copy of your credit report every year for free at annualcreditreport.com. So if you download that and send it to me, credit reports can be pretty hard to read, but I can kind of give you an idea of what's going on before we even run your credit. Some tips and tricks is, obviously download the Experian app, use that, it's free. Contact credit repair if you're below that 580 range. You can also reach out to the bureaus yourself. So if you have some derogatory marks or late payments or medical bills, there are, forms that you can fill out online and mail those in, and, you can deal with that yourself. I typically would only suggest that on, stuff that's already been taken care of or is pretty minor. Obviously, stop making late payments. That will impact your credit score. And then you can get added to a card with somebody as an authorized user. So I have a lot of clients do that. Basically what you could tell, like if you have a grandma or mom, aunt, dad, somebody like that, that has a long line of credit with good credit, they can add you to their account as an authorized user, and they don't even have to give you the card, but it just will show that you have a longer credit history. And Advantage Credit, my credit company, has said that this is one of the quickest ways to update your credit score and raise it. So that would be my suggestion. Like I said, I'm not a credit expert, but if you have questions about this stuff, get with me and we can go into that a little bit more. These are the 4 big loan types that I work with. So like we talked about, FHA, USDA, VA, and conventional. I created this chart so that everyone can kind of tell where they're going to be based off your personal situation and what you can expect as far as down payment, any additional mortgage insurance, and then how you qualify. So keep in mind on VA loans, you do have to be a veteran. It can only be the veteran. Oh, sorry, guys. It can only be the veteran on the loan unless you're married. So it can't be like a veteran and a child, or a veteran and a spouse, or an unmarried spouse, or a veteran and a parent. USDA loans are going to be for rural areas. So you do have to live in a deemed rural area by the Department of Agriculture. So if you like the idea of living in the middle of nowhere, this is kind of a good 0% down payment program for you. Some of the areas in Kansas City that qualify are going to be Oak Grove, Odessa, Bate City, Smithville, Kearney, um, Peculiar, some of the towns that are on the outskirts. So the big first time home buyers program that we have is going to be the FHA loan. That's a minimum of 3.5% down. You can qualify with a minimum of a 580 credit score. So we have a ton of people that go FHA. If you do have better credit and you're a first time home buyer, you're going to qualify for a 3% down conventional loan. The benefit to going conventional is after you have 20% equity in your home, the private mortgage insurance will fall off, and that will make your payment a little bit cheaper. And Rose can attest that when you're shopping, going conventional allows you to have a stronger offer. Listing agents know that conventional buyers have higher credit scores with less derogatories and are typically a little more qualified. So they're more likely to take that loan because it's more likely to close. So you do qualify with the 580. Obviously, the better your credit is, the better your interest rate's going to be, and the better loan programs you're going to have. So just keep that in mind. The higher you can get your credit, the better situation you're going to be in long term. But we can always get you in a house and refinance later once you've got some of those things taken care of, or your credit updated, or are in a better spot. So the documentation that I'm going to need from you, you'll start the application. My application has a portal. You can upload this stuff. You can email it to me, text it to me, whatever. The lender is going to require PDF. So make sure when you're sending this to me, you're not screenshotting it. You actually have to download it, save it, and then send it that way. But we're looking for driver's license, 30 days of recent pay stubs, and then your last 2 years of W-2. If you are a person who locks your credit report, make sure to unlock that before you have me pull it. And then proof of assets, which is typically bank statements. If you're pulling from retirement or selling a property or something like that, then we'll get that documentation as well. And then the big thing that we're looking for work history is going to be 2 years of work history. So it doesn't necessarily need to be at the same job, depending on the way that you're paid. If you're just an hourly W-2 employee, you could have, job changes. We even do see people have, gaps for maternity leave or death in the family or something like that. But you do have to have had a job at least for 2 years. If you are self-employed, same thing. 1099, same thing. If you're 1099 or self-employed, the 2 years needs to be with the same company, and that's the same for tip income. So if you're self-employed, 1099, tip income, get with me. Your situation is a little bit different, but that's kind of a general consensus for the work history. I just want to go into the 1099 and self-employed for people maybe that are in that situation. It does look a little bit different. So we're going to need your last 2 years of taxes. If you don't have 100% ownership in your company, you will have to provide some documentation for your percentage of the ownership. And if you're self-employed and you have a ton of write-offs and you write off most of your income, that is super common. We do have a bank statement program for people in that situation. Just keep in mind that there is a 680 minimum credit score requirement, and the interest rate is going to be higher. So what we always tell self-employed people, you're either going to pay for it in taxes or in your interest rate. So we can always get a game plan together if you're self-employed for, ideally where you need to be to still qualify and have write-offs where you're not overpaying in your taxes. So I just want to go over some costs that are associated with the loan and what you can expect to pay for. The big thing that most people don't know about is earnest money. That is essentially a deposit on the property showing that you are serious and intend to move forward. It's typically, in our experience, about 1% of the loan amount, and it's due 3 days after you go under contract. So this does have to be paid from your bank account, and we're going to be looking on your bank statements where the money came out of your account. So even if you have a 0% down program, you are still going to be required to put down earnest money. So you do need to have some sort of assets. And then your down payment is going to be different for everyone. So it's kind of hard to give you guys like a general consensus of where that's going to be. But you do pay your down payment at closing with the closing costs if you have any. We typically tell people to anticipate about 3 to 5% of the purchase price. And then closing costs are separate from the down payment. So that's something that a lot of people don't know. The closing costs are going to be fees associated with the loan, any title fees, and setting up your escrow account. The escrow account, I tell people to think of as basically like your savings account. So when you make your mortgage every month, they take the money that would go towards your property taxes and your homeowner's insurance, and they put it in the escrow account, which is like your savings account. And then at the end of the year, they're going to pay your property taxes and your homeowner's insurance out of that. So at closing, they set that account up. They do 15 months of homeowner's insurance and typically 6 months of taxes. So they pad your account that way. As your property taxes go up, you don't have to pay that money out of pocket. And that is going to be a big chunk of the closing costs. You can imagine if your property taxes are $4,000 a year and they collect 6 months of that, that's $3,000 right there. Rose will probably be able to give you guys some more insight about closing costs and seller pays and how that is in the market. Right now, we're still seeing some seller paid closing costs, but the closer it gets to spring and summer and the more that the market starts to heat up, that is something that we see less of in the summertime. So you can get with us for your situation about, how much you should anticipate for the closing costs, depending on what time of year you buy. So this slide is just kind of what happens after the pre-approval process. The first step is getting pre-approved. Once you're pre-approved, Rose will start shopping with you. She's going to tell you to talk to me first just to make sure you're good to go. Once you get connected with her, you guys are shopping, you go under contract. After that, we will start your loan. After that, we do the appraisal, we knock out any conditions of your loan, and then it's closing day. So it's pretty easy once you get pre-approved. I'm pretty on it in the beginning. I'm going to ask for all your documentations. You'll hear from me quite a bit up front. And that's just so the last couple of weeks before closing, you're just hanging out. Rose and I are very good about getting our deals done quickly. And we definitely think that that contributes to having the best client experience. So I wanted to touch on some frequently asked questions that I get asked quite a bit. So the number one is, how long does it take to get pre-approved? Like I said, typically 24 to 48 hours after I pull your credit. But what most people struggle with is it takes them a week to 2 weeks to get their pay stubs and W-2s. So if you are wanting to get pre-approved quick and you're one of those people who's going to wait till the last minute, just make sure that you have your documentation ready, because if I jump in your file and it's not there, I can go off what you're telling me, but it's honestly fairy dust until we see some documentation. So I can't actually issue a pre-approval until I've seen your pay stubs and W-2s. Do you have to pull my credit? So like I just said, if you want to get a game plan together, absolutely not. We can get things going and give you an idea of where you're going to be at. But if you truly want to be shopping and putting in offers with Rose, you'll absolutely have to be pre-approved. If you're really serious, I do suggest go ahead and get your credit pulled. Your credit is good for 120 days, which is 4 months. So we typically don't have people shop longer than 4 months. But to be honest, if you have a credit score over probably like the 650 range, getting your credit pulled more than once isn't going to be detrimental to it. But if you're more in the high 500s to low 600s, you would be a candidate you would need to be more careful about it having pulled more than once. And a lot of people ask me about down payment assistance and 0% down programs. So they are out there. We do have the 0% down for USDA and VA, but a lot of people don't want to put a down payment down. So my company just launched a DPA program. So if that's something you're interested in, get with me. Just keep in mind with the down payment assistance, they actually end up financing your down payment over 10 to 30 years, depending on the program. So what happens, let's say your down payment and closing costs are $10,000 to $15,000 altogether. You actually have a second lien on your mortgage, and typically there's a forgiveness period, and it's normally 10 years. So what happens is that second lien stays on your mortgage for 10 years. Sometimes you even have to make a monthly payment towards it. And if you ever move or refinance before the forgiveness period, then you have to pay that amount back in full. So um, the fees on down payment assistance are a little bit higher. The rate is quite a bit higher on down payment assistance. So Rose and I will always encourage you to try to save some money, put some money down. Long term, it's definitely going to put you in a better situation. But I know there are people out there that don't really have any other option. And so we kind of use the down payment assistance as a last resort. Um, Down payment assistance to me is very similar to buying a car from a buy here, pay here place. You can definitely do it, but it probably is not the best situation for you long term. So just keep that in mind. Um, what is my interest rate? So this is probably the number two question that I get asked about. Interest rates change every single day. They change multiple times a day. So what the interest rate is right now is not what it will be tomorrow at this time. So keep that in mind. You actually lock your interest rate typically 30 days before closing. So whenever you get under contract, that's normally when we lock your interest rate. Once we lock it, it is set and it's not going to change. But just keep in mind when we're chatting for the pre-approval, that is not going to be the interest rate that you most likely get under contract with. And I am a broker, so I work with over 12 lenders. So I will definitely be able to get you the best rate. I'll go over all the options with you. And rates are a little bit high right now because it is a slower time of year. So what we have all of our buyers right now doing is we just have them on a game plan where we're going to keep an eye on the interest rates. When they go back down, we'll reach out, give you the options and let you know, hey, if you were to refinance, this is what it's going to look like for your monthly payment. And then you can decide if that makes sense for you. Rose can kind of tell you from experience, it just depends on what you're looking for. If you are buying a house and you're going to die in it, then absolutely the interest rate is very important. But what we see for most people is, they don't plan on living in the same house forever. So keep that in mind because your interest rate will change when you move. So what isn't going to change is what you paid for the house. So we have a lot of people who had really great interest rates last summer, but they also paid over asking for their house anywhere from $10,000 to $20,000. So just keep that in mind. Like what you pay for your house isn't going to change, but the interest rates do change. And most people that have bought and sold before know that. And to be honest, the interest rate is just kind of what it is until they change. So keep that in mind. And then the other big question that I wanted to address is how long is your pre-approval good for? So like I mentioned, your credit is good for 120 days, which is 4 months. That's typically about how long we have people pre-approved for. If you go outside of the 4 months, as long as nothing has changed, you haven't quit your job, done anything else crazy, bought a new car, we would just update your credit report and you would still be pre-approved. So if you are, wondering, when should I get pre-approved? We always tell people about 60 to 90 days out, ideally at the minimum, before you're ready to move. So if you want to connect with me, make sure to follow my Facebook business page. Rose and I put out a ton of content on social media. So this is where we're releasing things like the free pre-approval ebook. This is where we post about the home buyer seminar. I try to post weekly videos about things going on in the market and different topics that are trending at the moment. I also have a business Instagram. It's Broker Babe KC. You can follow me on there. I am a little bit more active on Instagram than Facebook, I think personally. I think Rose is too. And so make sure to follow us on there. I also have a YouTube page. It's just under Austyn Anderson. And I do upload all of my videos to the YouTube page as well. So if you're just looking to one night dive in and kind of get a bunch of knowledge, check the YouTube page out because that's going to have everything all together. So just right now, does anyone have any questions before I hand things over to Rose or something that I didn't touch on? I know it was a lot. So the
Anna had
difference,
a question.
yeah,
Did you
sorry, I
in
see
the
it.
chat? What
Yeah.
is the difference between pre-qualified and pre-approval?
So the difference between getting pre-qualified and pre-approval is just having a game plan together and actually me having reviewed your financial documents and ran your credit. A lot of people will not run your credit and tell you that everything is good. I like to run everyone through my automated underwriting system. I do that because I know if I get an approve from that your loan is going to close. So I just like to do that. It's in the client's best interest. That way, like I mentioned earlier, you guys aren't shopping and spending money and then something comes back and kills the deal. Just to give you guys like a couple examples of things that I've seen happen, I have had people, not my deals, but other people that I've helped out. They had, let's say, delinquent student loans and they got their credit ran and they were under contract and all of that. And they had delinquent student loans. Well, you cannot have delinquent student loans and buy a house. It's a big no-no. So that's something that they could have caught if they would have done that up front. Same thing with back child support. He can't have back child support and stuff like that. So it's really just for your well-being. What happens if you lose your job during the middle of the process? Okay, this is a great question. So if you were to lose your job, we would need you to immediately get another job. If you were able to get an offer letter or, some sort of employment from somebody else, you typically would just need a pay stub within 30 days of closing. If you don't have anything else lined up, you most likely would have to cancel on the contract. I do have what's called a DSCR loan, but it's more for investors where they don't verify your income, but it is just for investment property. So if you're looking for a primary residence, that probably wouldn't work. So I would definitely try not to switch employers during the loan process. Typically, the only time we see that work is people who are relocating that do already have a job lined up somewhere else. Yes, the DS. So Anna asked, does that require a higher rate with the DSCR loan? Absolutely. So DSCR loans are going to be for investors, and it's a no income doc loan. So what that means is as long as you can put 30% down, I don't care about your taxes, your W-2s, any of that. The rate is higher, and you do have to put 30% down, which is quite a bit more than 3 to 5%. But as long as the property is cash flowing and it appraises and everything like that, then they don't look at any of your financial documents. But the investment rates are going to be higher than primary mortgage rates in general because they know that you're making money off of it. And so they want their money too. So just keep that in mind if you ever get into the investment world, whenever you're buying investment properties, the rate typically is going to be higher. Rose, is there anything that I didn't touch on that you think I need to breeze over real quick before I turn it over to you?
I was just going to ask if people are hesitant about the higher interest rates, like are there buy down programs?
Yes, so we do have some buy down programs. There's a couple different options. So something that most people don't know is you can always buy your interest rate down. So there's actually when you lock a loan, this is something no other lender is going to tell you. When you lock a loan, there's a fee associated with it. It's called a rate lock charge. I always give my clients the lowest rate lock charge. But you can, like, let's say that you were crazy and you had $5,000 and you wanted to buy your interest rate down, you could definitely do that. We don't see that making sense for people right now because we just suggest them to refi. But last summer, when rates were in the 2.5 and the 3.5%, we had a ton of people doing that. In my opinion, what makes the most sense right now is to get a seller credit if possible. So if you had a $5,000 seller credit, you could apply that to buying down the rate and you could use the seller credits to do that. If you were going to be in the property for less than 3 years, we would probably have you do a 2-for-1 buy down, which means that your rate would be 2% lower the first year and then 1% lower the second year. And then obviously, if you sold and moved before the rate adjusted back to the original rate, then you would have gotten basically 3% off on the interest rate over the last 2 years. All righty, guys. Anybody got anything else? Feel like I talked really fast. Sorry. Okay, perfect. Well, Rose, I'm going to turn it over to you. Okay.
Perfect. Okay. All right. Can you see my screen? Okay.
Yeah, it's like your iPad background right now.
Hello.
Uh-oh.
I think it
Okay.
froze on. Can you see it?
Yeah, we can see it now.
Okay. Okay. Perfect. So thank you, Austyn, for all of that information, because that is truly the first step before meeting with an agent. Sometimes if you don't even know where to start, you can meet with an agent, and then we would just send I would just give a referral to, again, lenders that we trust and we like to work with. So then after you are pre-approved, so because the first step is the finance part, and so we can skip on to the home search. After you are pre-approved, that is when we can get together and do a home buying consult. So that's when we talk about your needs and wants in a home, as well as to go over like what we're going over now. So after you're pre-approved, we will have that consult, and then we'll talk about what you're looking for in a home, what your time frame is, because we are also looking about 30 to 60 days out is typically when we can get under contract. And then after we talk about your needs and wants in a home, that's when I will put you on a home search that is coming from the MLS, Zillow, Realtor.com. Those are all great resources for you, but the MLS is going to be the most accurate, up-to-date information. All of those other sites actually feed from the MLS. So after that, so that's real-time market updates that you are getting from the MLS, and then we will be in contact to see what properties you are interested in showing, and then we would schedule through the showing service on a time and day that works for you. After you view the property, if you do want to place an offer, there are a few things that can be written up or negotiated. So obviously purchase price, how much you want to pay for the property. There's earnest money that Austyn also talked about. It's typically 1% of the purchase price that also needs to be included in the contract of how much you would be willing to put for earnest money. There's also close date. So what a good time frame for you to close, if it's 30, 60 days. Also, it's dependent on if the seller has a preferred date, if you can accommodate that. Also, seller paid closing. So in some instances, you can ask the seller to pay some of your closing costs. Also, what Austyn mentioned is we're not seeing so much of that when we go into the spring and summer market, but right now there is opportunity where we are asking for seller paid closing. And then so all of this too, I want to have you keep in mind that we are going to do our due diligence of, if you are interested in writing an offer on a property, that's when we will call the agent. We will get all of the information we can. If they have any other offers, what the seller's preferred close date is, if there's anything else that can make us competitive, if they are in a multiple offer situation. So there are all these things that I'll gather, and then we'll make an educated decision on what you would like to offer and what your best offer would be at that time. And then after you are under contract, say the seller accepted your offer, the next steps is to deposit that earnest money, again, about a 1% earnest deposit that goes to the title company. And the title company holds those funds. That does go toward your down payment at the end. But it is an upfront cost that I like to tell people that I like people to keep in mind. That is an upfront cost, as well as an additional, after you're under contract, you have 10 days to do the inspection period. And there is an inspection for everything. So there's a whole house, there's termite, there's radon, there's mold, there's sewer, there's all of these inspections that you can do, but that is an additional cost to you. So keep that in mind. That is also another out-of-pocket expense for you, depending on what inspections you want to do. So that is within 10 days after an accepted contract. And then after that, say there are items that you are major items, and I want to spend a little more time on the inspection part, because especially if you are a first-time home buyer, the inspector they are paid to point out literally every single little thing in the home. And I like to advise my clients, we're just focusing on major items, especially if it's not a new build to where it's completely built from the ground up. For a resale home, there are going to be issues. So major items to be on the lookout for: roof, foundation, plumbing, electrical, safety. So any of those items, you then have like a negotiating period if you didn't accept in its present condition, which I'll talk about that in a little bit, where you can negotiate. You have an additional 5 days to negotiate after the inspections, where you can ask the seller to either do those repairs before you move in, or you can ask for a credit. That way you can do it after you move in. So those are some options there for negotiating. And then after that, when you are done, you're done with negotiating, you're ready to move forward, that's when I'll contact Austyn and be like, hey, we're ready for the appraisal. And the appraisal is there for your protection. You're making sure that you're not paying more than what the house is worth, and you can only get a loan based on the appraisal. So if the appraisal comes in at $300,000, and that was a purchase price that you did, then so you're good there. So if it comes in above, that's great. That means you have equity already in the home. If it comes in below, it becomes another negotiating period where the seller would either need to come down in price, or you would need to come up in cash to cover that gap. Also in this process, Austyn would tell you to shop around for homeowners insurance, make sure you have that secure as well. And then after all of that is the fun part. So we have the final walkthrough of the property. We make sure if you did ask for repairs, we're checking those repairs, making sure those are done. And then we are getting title to come close. Typically walkthrough is done a day or two before closing, and then we'd have title come and close. That's when Austyn would also give you a final amount that you would need to bring to closing, which would include your down payment and your closing costs. And so it would be like a cashier's check or a wire that you would bring to closing to distribute, so they can distribute those funds. And then after that, you get your keys and it's all yours. So, and then briefly, I wanted to talk about, besides the process, there are things that we can do to make your offer more competitive if you are in a multiple offer situation. And I wanted to briefly point those out. So in its present condition, there are 3 boxes on that document. So one is that you have a right to do inspections, but you won't ask the seller to do repairs. The second one, remind me. Yeah. So the second one is, wait, you can do inspections. Wait, you can still, sorry. So The first one is you still can walk away if the results are unacceptable. You can still do the inspections. Results are unacceptable. You can still walk away from the deal because the seller won't do any repairs. The second one is that you can still do inspections, but you waive the right to ask the seller to do repairs. And the third one is completely waiving inspections. We don't recommend that. We always tell our buyers to definitely do inspections if you are able to, but that just at least gives you the knowledge of any of those inspection items that maybe you need to come in and do those repairs after, if you do accept in its present condition. Obviously, any like price, if you wanted to go up in price, that would be more competitive. Also earnest money, if you're able to put more than 1% down, that basically in the seller's eyes makes sure that you are financially able to purchase the property. Again, maybe not asking for closing costs, that sort of thing. I don't know if we'll see this necessarily as much as we did last summer, but there are ways where you can tell them upfront if the appraisal does come in lower that you would be open to covering that gap in cash. That way they're not worried about the appraisal in another negotiating period. So those are kind of my tips on if we are in a multiple offer situation, how to make your offer stand out. Those are some things that we can do. I also, when I send the email to the agent and include the offer documents, I like CCing Austyn because then she can call the agent and let them know how qualified you are. And we really work together as a team to make sure that we do everything in our power to get you the house. So that's all I got. Does anyone have any questions?
Rose, I just wanted you to let everyone know if you have any bilingual agents on your team.
Yes. So we have a Vietnamese speaking, we have Farsi speaking, myself, we have Spanish speaking. So we have all of those people to help make sure you're in the right hands if you prefer working with a certain agent who speaks your language. So we can definitely refer you to them.
Yes, and definitely something to tell other people because that is really rare in real estate for you guys to
Yeah.
have 4 languages at a brokerage. That's awesome. I
Yeah.
love that about you guys.
I know I feel like I went super fast, so that's why I want to see if anyone has anything for me.
Well, I would like to give you some credit that you're very good at writing offers. And I think one of Rose's best qualities is her negotiation skills. So most of the time, I do feel like our offers get picked. And she knows she will be very honest with you up front. Hey, this is what we need to do to get this deal. And, as long as you're willing to do that, we always get the deal. So I think that makes, working with you extra special too.
Right, right. And I do want to make sure too, throughout the process and throughout, writing the offer and everything, that you are comfortable. I don't want you to go, crazy if that's not something that you are comfortable with. So I can only give you all the knowledge that I have, all the information that I have. And then at the end of the day, you're the one that makes that decision. But just knowing that I am providing all of this to you, and then you make that decision based on what you are comfortable with.
And have you ever had somebody shop longer than 60 days? I was
Yes.
thinking of merit
Yeah.
specifically.
Yeah. Yes. And that was the thing, is like, I feel like she didn't have the best experience with another agent. And then, so she was already looking for a long time and then came to me. And then we were looking for a few months because she was writing strong offers too. And they were just getting, that was in the crazy low interest rate market.
Well,
And
and there was a couple houses that she decided she didn't end up wanting, and I liked that you didn't pressure her into those, even though
oh
she
yeah.
had been shopping for a while. You're very receptive to what people want, even if it takes a little bit longer.
And I'll be honest too, if it's like if we've talked in the beginning and you've given me all this criteria, your needs and wants in a home, and if something I feel like isn't necessarily right for you, I will tell you. Again, ultimately, you make that decision, but it's my job, it's our job to look out for your best interest.
Did you see Anna had a question in the chat?
Okay. She said, what documents are typically included in the contract? Yes, so you have the residential real estate contract, which is going to have all of that information on there with the purchase price and all of that good stuff. You have the seller's disclosures, which are every seller's disclosure is different on every property because that's what the seller discloses every known fact about the property that you will have access to before you write an offer. So that tells you roof age, HVAC, if there are any plumbing, electrical issues that they are aware of. Of course, you can do inspections anyway on your own time, but it's nice to have something that you have an idea about. What the seller knows about the home. Other than that, there's just other supplementary documents like lead-based paint. If a house is older than, I think it was
85, I think. 75 or 85?
1978. 19, and
78, yeah.
I know it was 1970 something. I didn't know if it was 1973. Okay, it's 1978. Then you will need to have a lead-based paint addendum, basically stating that the seller has knowledge or doesn't have knowledge of lead-based paint in the home. Other documents include, we do need to submit your pre-approval document with your offer, which is why it's important that you have that letter ready when we do write an offer. And then in its present condition, so if, again, it's like if you decide that you're willing to accept in its present condition, not ask for repairs, that's an additional document that we can do. So it just is a case by case basis, different scenarios, different houses will have different things. There's also like an escalatory addendum that we put in the additional terms and conditions, which I don't want to give you all my tricks. So, so we can talk about that when you're writing an offer also to make you more competitive. So
Perfect.
if that helps.
I had a couple things that I had forgotten to touch on that I thought about while you were presenting, and I was like, oh, I forgot that. So I'm going to go over those. And then if anyone else has any questions in the meantime for either Rose or I, make sure to drop those, and then we'll answer them before we jump off. And then I don't know if you saw Ross asked about us sending the recording and emailing them that. So we are going to email you guys the recording. That way, if you jumped on late or you just want to rewatch, you can do that. We're also going to send you a copy of the pre-approval ebook that we've put together. That goes a lot more in depth than what I presented over, because I have basically every scenario laid out in the book. So if you're interested in more, definitely check out that pre-approval ebook. So when Rose was talking about extra expenses, so I told you guys about earnest money and she told you about the inspection. And like she said, there is an appraisal. In our experience, the inspection is around $600 if you just get like a house appraisal without the sewer and all the extra stuff. And the appraisal is typically right around $600 too. So keep that in mind. Those are payments that you have to make before closing, but they do come out of the total amount. So in the beginning, once your loan is locked, you get what's called a loan estimate, and it'll show the appraisal fee on there, and it will come off, which will lower the amount you bring to closing. But that is something that you have to pay up front. The earnest money needs to be a cashier's check and come out of your bank account. The appraisal and the inspection can go on a credit card or something else that's not as important. The other big thing is just keep in mind, I'm going to be looking at 2 months of your most recent bank statements. So once you get within about 90 days of buying a house, do not start depositing cash into your bank account. If you make cash and you are a tip income employee, get with me on that. But if you have any cash go in your bank account that's over $300 to $500 within the last 2 months, they're going to want to know where it came from. And if you can't prove where it came from, they're going to back it out and you're not going to be able to use that money towards closing. So if you're a unicorn and you've just got tons of money laying around, probably not something to be as concerned about, but just be cautious of that. And if you have cash that you do need to use, get with me. That way we can make sure that you're able to use it. Um, the other big thing that I wanted to remind everyone and let everyone know is that in the beginning, pretty much everything is going to be via email. So we use DocuSign to sign the initial contract, to sign the documents, and all of my disclosures. And you're going to get these disclosures over and over and over again. The numbers are going to change. Obviously, the first disclosure you get, we don't know where your homeowner's insurance is going to be and what the title fees are going to be and all of those things. So it's a big template. As you go through the loan process, we'll take the fees off. And all of this is e-signed, but you do have to go in person to closing. So when we close at Rose's office. You'll go in person and you will wet signature everything that you have e-signed. So do expect that, because I've had people where they just think they can e-sign everything, but you will need to go in person in closing. And the title companies work 9 to 5. So just keep in mind, you may have to take a day off or something like that. We can do a remote closing. We do have a notary, and our title lady, Courtney, is seriously phenomenal. I absolutely love her. We've had her go before to have people sign. Typically it's about $100 extra for the notary to come out and see you. But that is an option, but you will still have to wet signature everything. All right. Rose, you got anything else?
Well, and also we like to say that we have an amazing, or we try to have an amazing closing experience, because it's a big deal to buy a house. So we definitely like you in the office so we can celebrate you after you're done signing. So that's one of the things we like about our office.
Yes, Rose makes the closing experience very special. And too, that way, I mean, keep in mind, especially on my end, obviously, when you sign a real estate contract, it's a legally binding document. With me on the loan side, you can always back out. So that's why we have you wet signature everything at closing, because you could change your mind, go with another lender, et cetera, et cetera. So, you know, it's really to prevent fraud and stuff like that. Everyone has to come in. Okay, cool. Well, thanks so much for joining us, everyone. Yes, we appreciate it. Like I said, we're going to send out everybody the pre-approval ebook and then this recording. Make sure to follow Rose and I on Facebook and Instagram. We put a ton of content out. And if you have questions, you know, reach out to us. We'll send our cell phone numbers and all of that. Yes, Ashley, we're going to make this recording. We recorded it. So when we end the recording, we'll send that to you, and then you can send that to anybody you want to, or anyone that couldn't jump on at 6. All righty. Thanks so much, guys. Have a good night, everyone.
Bye. Thank you.
Bye.